Hi and Assalamualaikum to everyone. So I'm Muhammad Shazri bin Azmi. So we have two another members. First Nur Atika binti Ibrahim and second Nur Hazmira Tasha binti Nur Hazlan. So today we are from Group 5 would like to present for assignment ACC 407 Financial Accounting and Reporting of a Sole Proprietorship or Partnership Business. So the next slide is introduction. So the introduction is about how we do to finish our assignment successfully, and everyone prepare communication skill for interview and presentation through on video. Firstly, we discuss which company we want to select for interview session. So we have found a sole proprietorship company that's willing to be interviewed, which is One Fast Enterprise. So in interview we have asked a lot of questions such as name of business, type of business, location, capital, also business activity. So we need to analyze One Fast Enterprise business classification such as asset, liability, capital, revenue, and last expenses. The last and the most important is how each company recording their process account from journal to statement financial. Also the strength and the weakness accounting process recording. So this is the background of company. The name of company is One Fast Enterprise. So One Fast Enterprise is a livestock based business. It is registered with Company Commission of Malaysia or SSM on 23 March 2019. This is a sole proprietorship company, a company that owned by a single person. So the owner is One Fast Enterprise is Encik Muhammad Fazli bin Sarip. The business is located at kilometer 1617 Jalan IKS 3 IKS Paya Datuk, postcode 78000 Alu Gajah, Melaka, Malaysia. So the business activity of this company involves selling and supplying livestock, feed and medicine, and the mainly activity of this business is the sale of livestock. So So this is a characteristic of company. From the slide we have 4 characteristics. The first, registration. Second, capital. Third, ownership. And last, management and control. So this company is a sole proprietorship company, and it is registered with the business register under the Business Registration Act 1957. So and the second is capital. Capital was contributed by the owner. So this company capital is brought by the owner, which is 10,000. And then third characteristic, ownership, owned by one person. So the owner is Encik Muhammad Fazli bin Sarip. He is assisted by 2%, which is Encik Muhammad Ridwan and Encik Muhammad Faiz. So the last characteristic, management and control. Managed and controlled by the owner. So every activity in this company is controlled by Encik Muhammad Fazli bin Sarip. So this company is a livestock-based business which involve breed for the breeding purpose. This company selling their livestock to the market and have a high demand during festival of Eid al-Fitr and Eid al-Adha. They also have a demand from customer for the purpose of Akikah and other celebration that need fresh meat.
Assalamualaikum. My name is Nur Atika and I'm going to present the classification of business. Every business must have their own transaction to know their company profit and loss. The transaction must be classified by 5 elements, which are asset, liability, owner's equity, revenue, and expenses. The first element that I want to discuss is asset. Asset is an object or entity that has current or future economic value to the business. There are 2 types of asset. The first one is non-current asset and the second one is current asset. Non-current asset is a tangible asset with lifespan of at least 1 year and usually longer. Current asset is an item that are completely consumed, sold, or converted into cash in 12 months or less. For example, non-current assets for this company are land, lorry, and machinery. The current asset of this company are cash in hand and cash at bank. The second element is liabilities. Liabilities is a debt or financial obligations of the business that need to be settled to other parties. There are 2 types of liability, which are current liabilities and non-current liabilities. Current liabilities is a debt that are paid in 12 months or less. Non-current liabilities are typically mortgage or loan used to purchase or maintain fixed assets and are paid in years instead of months. The current liabilities of OneFast Enterprise is account payable, and the non-current liabilities of this company is loans from bank for maintaining their business. The third one is owner's equity. Owner's equity is a capital brought by the owner into the business. The capital brought by Mr. Fazli bin Sarip, the owner of OneFast Enterprise, is Rm 10,000. Next, the fourth element is revenue. Revenue is a benefit that business earn from selling product or services or from interest and dividends on marketable securities. OneFast Enterprise targets their revenue Rm 15,000 per month from their business activities. The last element that I want to discuss is expenses. Expenses is a spending habitually by the company on monthly basis for the business operation. Expenses can be classified into two classes. The first one is operating expenses, and the second one is non-operating expenses. Operating expenses that has been spent by this company are salaries, utilities, commercial expenses, rental expenses, and petrol. Non-operating expenses that occurred in this company are asset depreciation and tax. The next one is the recording process of the business. OneFast Enterprise has hired an accounting company named Shafiq Suhaimi & Co. to record the accounting of his company. The accountant company will charge fee Rm 4,000 per year for maintaining the business account. The company will record all the transactions occurred throughout the year and organize them by date. At the end of the year, OneFast Enterprise will send documents to the accounting company to record everything related to the accounting process. For example, the documents that will be sent to the accounting company are bank statements, expenses receipt, income receipt, tax receipt, and utilities bill. Now I want to discuss the strength of the recording process. The first one is familiarity with the business. An in-house accountant gains a true awareness of the finance, business processes, and particulars of the company sector. They can see possible problems or possibilities that an outside accountant would miss because of their extensive expertise. The accounting company also may coordinate their efforts with the aims and objective of the company and offer insightful information to support well-informed decision making. The second one is proactive approach. When using an accounting company, it can free up time for the business owner to to concentrate on other elements of the company. It also can provide access to a team of experts that can provide clients with greater service than the business could provide on its own. Allowing the specialist to handle accounting and finance might free up time of the business owner to concentrate on other elements of the company. Access to a broader spectrum of knowledge and experience than an internal team may be obtained through it. It can give access to a group of professionals that can serve customers better than the company could on its own. The third one is reduce costs. When hiring external accountant assistants to oversee the finance division is typically more economical and effective than hiring staff members from inside. It also can focusing on core business functions and solving capacity issues are primary drivers to outsource. The weakness of the recording process. There are 4 weaknesses that can be found by hiring an accounting company. The first one is limited expertise. This limitation can make it more difficult for the company to benefit from the specialized accounting services the company might require in order to meet its goal and optimize its finances. They also may need more expertise to address complex accounting issues, implement advanced tax strategies, or provide specialized advisory services. The second one is hidden costs. Overhead costs cover the upkeep of the accountant's workspace, tools, software license, and chances for professional growth. These expenses may mount up rapidly and put a pressure on the company budget, particularly for small expertise with tight budget, depending on the region and the accountant's degree of knowledge. The third one is limited customization. Particularly, specialized companies would need particular accounting solutions. Certain outsourcing providers might not have the adaptability or knowledge to meet the unique demands and subtleties of a certain business. The last one is communication problems. With time zone difference, cultural barriers, or imprecise communications may cause miscommunications and delays. Additionally, working with third party is a different experience than asking an employee to do what you want right away. Thank you.